days approval, and we're hoping to get everything done in next 10 days from that 5 days.
So like all the,
Everything, all docs, everything in. Lawyer to get the.
what if there's
instruction.
like missing documents that miscalculates the, I'm just curious, like, is there any opportunities where there may be a non-approval between that 5 day, like that approval, like you said, we have finance is there,
Mhm.
and the documentation's coming afterwards? Is there an opportunity where there's like,
That's why we're extending the pre-approval time to 7 days. Because employment letters don't come in for 4 to 5 days. So we're extending that time. What I'm getting at is, you know how you give a client and in 2 days you start to show? That we're not allowed. We're going up to 7 days, making sure everything is underwritten before. So in the 5 days, we're not trying to collect documents, we're just doing the shop around and finding a lender rather than scrambling in those 5 days. Does that make sense?
Well, approvals are conditional. It's always conditional.
no, of course, I understand that, it's just,
So they have to
Yeah.
set.
So
It's just-
we're taking 7 days to collect all the documents upfront. Okay? And then in the 5-day condition, we're just looking for lenders to get the files done.
You say you gotta do everything within 10 days when you do that.
Yes, so in 10 days, we want the documents done and cleared. Because let's say if you have a 30-day closing, 10 days prior to that, if the file is not complete, the lender pushes the closing date.
You gotta
So-
do the appraisal of that then.
Everything. Everything. So it's a lot of rush. It's a lot of rush. The pressure's there. Why I say this is your support may be needed. Client may go, whoa, this is too much, I have what to do, I have daycare, I have this, I have that. Yes, but this has to be done earlier now, rather than waiting until last minute. Because in 2018, 2017 even, I gave the last piece of document this morning and the funds were released this evening. Doesn't happen anymore. The lenders want 10 days cool-off period. Fisco wants the file to be complete and ready to be audited for 10 days. Last 10 days.
So the sooner we send you the client, like we're doing showings, don't wait until actually find a home.
Exactly.
Sooner we send you the.
Okay, so that's what it translates into. You have a client that is interested, I would say show them 1 or 2, because sometimes clients don't want to give information until they see something. Because see, mortgage is not a tangible product. A home is a tangible product. The person sees it, walks through, so on and so forth. So once they see 1 or 2, don't continue looking for a home, get an offer in, and then send the client. I wouldn't do that way, yes.
But should you already be working with buyers who know how much they qualify for, that's done before?
Ideally. See, for instance, I have a client that bought in Curtis, okay? This is a Fiji family from Fiji. Husband and wife, they want to buy, they came in, they put in an offer. Offer was there, they came in first day. We started, they qualify for 3/4 of what they bought. So now, uncle comes in to co-sign and brings it up to speed. But uncle works in Alberta. So he's gone for 2 weeks, back for a week. So on and so forth. How do you get a letter of employment? Right? It took us, we had to get another 5-day extension to get the letter of employment in. But that was the only reason we had to. Had that client come in a week before, we wouldn't have that.
Extension of closing.
Extension of 5 days, not the closing. We never push the extension of closing. I've never had anyone here. We don't like to work on that because that comes in with penalties. And if it is a 5% down, it's a dead deal. Because when the seller poses penalties, client barely has 5%. Penalties on top, it's not closing.
The biggest issue on billing right now is appraiser report. It doesn't match the price, the value, even the condo showing it 650 can sell right away. The bank appraised it 500,000. So that 100, most of the properties are that.
So, good question and a legitimate concern. So, when you put in an offer, did you see comparables?
Yes.
I'm sure you did. But the appraisal says it's not worth that much. And there's a big gap. Now, you know your client better than we know your client before the client comes. If the client is 20% down, you can handle it. If the client is 5% down, it's not going to work. You are going to have a problem of closing. It's not going to work, just not going to work. Unless they cough up the difference. What I mean is, if 500 and 650, they have to come up with 150. And that 150 will have a lot of questions as to where that money came from.
And they already paying 20%. How does it make it easier?
You can go 5% now.
Oh, okay.
Okay, 5% and then use the rest of it for the top up.
For the difference.
Okay, but now comes in the problem as to 5%, can they qualify? Because qualification on 5% versus 20% is different.
Also, I refinance my investment property. I viewed from all the evidence, all the sold ones in the area, the value was 800,000. I showed the appraiser the day he came, and I showed the pictures of those houses. I actually went inside those houses. No upgrades as what I had. And I showed him they were sold 780, 790, and I knew mine were more than 800, but I thought 800 was a fair market. He came back 700,000.
So I'll tell you, this is what, so HBI is one of the company that we work with very closely, and Gord is actually very good to us. He's come in for presentations. Last year he wasn't, but the year before he was at the academy. My recent talk with him was, Faisal, there's a higher band, there's a lower band. And he says, right now we're using the lower band. So what's the lowest? Don't look at what's the fair market value. Look at what's the lowest, and it will be close to that.
Wait, say that again.
Okay, so in appraisal, there is a higher band and there is a lower band. So let's say if you're doing appraisal of a condo, and they are anywhere between 525 and 460. Use 460. I know it's not the number you want to use, but that's the number to use and do the calculations and make sure the client actually can afford and come up with the difference. Okay? Also, another problem with appraisers is they take the money and then they give the report. Okay? It's not like they give the report and if you like the report, you pay. That's not how it is. So, and most of them don't even answer the phone calls. They are not customer friendly. And if you tell them that, oh, comparison is this, they start to think that you are teaching them how to do their job, and now they give you worse values, and you cannot do anything about it. So my suggestion is to stay away from appraisal.
My banker advised me actually, my own banker.
Well, that didn't help though.
No, even in another property.
The advice was not helpful.
No.
I will tell you, stay away from appraisers. They can make your life miserable, really. I would, anytime there is an appraisal, I ask the client to clean the home, make it nice and clean. It does not have to be spotless. Nice and clean, as little clutter as possible, and leave. Don't be there following them. No, don't do that. Let them do their job. The easier their time is, the easier they will make your report. If they have a harder time getting through the property and such, yeah. We have no control over them, just remember. No one has control over them. They take the money, most of them get paid by the bank, so it does not matter. You like the report or you don't like the report. It's still, they're still paid. So, and they're not nice people. Most of them don't answer phone calls. They're not nice people.
paid by the bank?
Is there any changes in their way they used to do the work?
Appraisal?
Yes.
There's a lot more drilling.
No, I think they do, because there was like a couple of properties that I talked to you about.
Mm-hmm.
And I think the appraisal, actually, they start four offer,
See,
4 times.
See, every property is different. So I cannot comment on one or the other, but I do see one thing, that they're using conservative numbers, as conservative as possible. So look at the lowest number possible. If you see a condo sold for 460, which was in bad shape, and you have a client's condo that is well painted, well lit, and you think it's 525, no, start at 460. Okay? Now, if you are a listing agent, now that's in the purchase side. If you're a listing agent, don't tell the client it's 460. You won't get the listing. I would say start at 525 and then do price corrections if need be. Okay? Because it's a market where you have to list what the client says for you to get the listing. And then see how much interest is out there, because you never know, it might just get sold for 525. But the client will definitely not be happy if you go for 460. Yeah.
Have you seen any situations where a house was purchased, a resale purchase, not a pre-construction purchase?
Yeah.
And then they were not able to get the full financing that they needed?
Yeah. Happens all the time. Depending on the home. So there's a home that I was actually looking, it's actually my colleague's file, 100+ years downtown on Christie. Okay? And the lender, the most a lender said is they would get 75% loan to value, not 80. And there was a gap of 80. Okay? Now 5% gap on a 900,000 home is quite a big gap. Right? 5% on 300,000 is not a whole lot, 50,000. But on 900,000, you're looking at 45,000 difference. Where do you get that 45? Right? So because of that 45, the client had to go on the B side and pay 499 instead of paying 369 and get the entire 80%. Now, when it comes to rate, I don't suggest you become sensitive to it. Don't say, oh my God, it's not our job. Our job is, can you afford the payment? If you cannot afford the payment, because this house comes with this type of financing for you. For an executive of a Coca-Cola company, different. Their financing is different. For you, combination with this house, this is what it's coming to. Can you afford it? Now, that affording or that going on the B side is short term. I've never done a B mortgage any more than 2 years. And in 2 years, there's enough equity. The client's income has gone a little bit up. Credit has probably improved a bit. Now you can go on the A side. And refinancing on the A side is easier. So purchase on the B side is easier. And then you move it to the A side. Yes?
You said funding will get 10 days, about 10 days. I'm a little confused.
Okay. So let me give you an example.
Yes, okay.
February 1st, the client was introduced.
Okay,
Okay? Hey, this is my mortgage broker. Can you please get the financing done?
okay.
February 7th, you got a pre-approval letter.
Pre-approval letter, is that a commitment letter? Or
It's not.
It's not,
It says that your client can get up to this purchase price.
okay.
Okay? You show the house, February 20th, you buy a home for them.
Oh, okay.
February doesn't have 30, but March 1st, March 2nd, the file is complete. Within February 20th and March 2nd, well actually from February 1st to 7th, we will collect as much as possible documents. And from February 20th to March 2nd, everything is done, lawyer has the documents. We don't need to touch the file again.
So the closing day is not on the March 2nd, is after
No,
that.
after that. 10
But-
days after that.
But the lawyer will get, so basically, once the lawyer get this mortgage statement, and that the deal is done.
That's when the deal is done.
Oh, okay, so.
Mortgage instructions is a key, we like to say as a, it's an anchor point where that's final, done.
So any, like say, commitment letter, those, not approval letter, it's nothing.
Commitment means there is, the file has good strength, but small things could change.
But I have a case, they give you the commitment letter, and after that, they still asking you for some kind of support documents, right?
Yeah.
When you give to them, and and after that, they said, no good.
Okay.
The commitment letter is nothing.
I'll
They
tell
reject
you what happens.
What?
So there's two types of life insurance. Okay, and I'm just going to compare this with life insurance because it's a very good comparison. The bank life insurance is sign here, pay $200, you have a life insurance. From life insurance company, it's like sign here, nurse will come to your house, will check your height, weight, urine sample, blood sample, everything. You'll go to the doctor, you'll sign few more forms, and we will take a month. You will start to wonder, am I getting life insurance? And then you get something in the mail saying, yes.